Hey everyone, it's Ryan with Stock Investing and Trading 101. Last week we introduced the $10,000 Robinhood Trading Challenge. Today we're doing week 2 of our trading challenge. This is where we pretty much withdrew all of our profit from our Robinhood account. We made about a 100% return during the last year. So we withdrew about $13,000 of profit. We left our account with about a $10,000 value, which is currently what we're trading with. We have about $3,000 in buying power, so we're really only currently trading with about $10,000 of buying power. And what we're doing is we're trying to get back up to that $25,000 benchmark, just as a kind of a challenge to ourselves, as well as to share it with you guys, and also to show you guys that you don't need 25,000 or some large number to begin trading in the market. If you have a consistent strategy, and if you kind of understand the markets and build some kind of strategy, you can totally grow an account from small to giant. And that's what we're going to be sharing with you guys. So here we are, week 2. We are having a pretty good day today, up about $70, which is about 0.5%. During the past week, we have a 1.7% return, which is over $200, which is actually pretty good considering it's such a small account, and 2% return in 1 week is pretty good, I would say. So let's get right into our current positions and our strategy with this $10,000 challenge here. What I'm doing is taking about half of the money, so about $5,000, and I'm selling options, whether it's a covered call or a cash secured put. What I'm doing specifically is I'm looking for stocks that are between $20 and $30 per share, and that way you can sell 2 different options instead of just one option, because you want to diversify. And if your account value is only $10,000, it probably wouldn't be a good idea to sell an option that's $5,000 of collateral, which is half of your money, because obviously you want to diversify and you don't want to put all your eggs in one basket. So what we're doing is we're selling a covered call on AT&T, which isn't producing that much income because, once again, it has a low implied volatility, which you can see right here, and it also has a low theta, which means that with a theta of minus 0.03, we're only making about $3 per day in time decay, which is what selling premium is all about, is benefiting from that time decay. The other option that we're selling is on Rocket Mortgages, which is yielding much better results. You see it has an implied volatility of over 100%. It also has a theta of minus 0.07, which means with this contract we're making about $7 a day, which is double what we're making on the AT&T contract. On top of that, this option costs about 2/3 of the cost of the AT&T option. To sell the covered call on AT&T, it required that we have about $3,000 of collateral. In the Rocket Mortgages put that you see right here, it only requires $2,189 of collateral. So we're putting up less money, we're getting more premium up front, and we're also getting more theta time decay each and every day. So last week, I'll show you guys the status of my previous cash secured put that we sold. So last week I had a cash secured put on Rocket Mortgages once again that we sold for a $33 credit up front. We ended up buying it back for just $11 the next day, or a couple of days later. So we bought it back. We made a quick $22 profit. We rolled the money into another cash secured put. It had a slightly higher strike price, so we took in more credit up front, and this also expires on the 1st, which is just 2 days away on this shortened week. So pretty much we closed our contract from the last week. We rolled the funds into a new contract that also expires this week, and we took in more credit for doing so, and it looks like this contract is on pace to expire worthless. We could close it out, and we could take our 57% profit, which, most of the time, once you pass a 50% profit, What I like to do personally is take the profit and roll it into something else. But since this only has 2 days left, and it looks like it's pretty far from getting assigned, it's probably going to expire worthless. I think I'm just going to hold on to it and let it maybe close it tomorrow, or maybe just let it get expire worthless and keep all of the credit. What we're doing with the other half of our money is we're buying stocks. We're doing a little bit of investing, a little bit of dividends, a little bit of swing trading, and a little bit of scalping or day trading. So what I'm doing with this strategy specifically is pretty much I take my watch lists. I have a couple of different watch lists, and what I do is I come on the watch lists every day and I filter them by percent change, and I look for stocks that have had a between 2 and 5% or more decline for that specific day. So for example, you can see that today Barrick Gold fell nearly 3%, American Tower fell about 2.5%, and I look for stocks on this list that, first of all, I think are undervalued currently, so I like to look on longer term time frames, and as you guys can see on Barrick Gold, the stock is pretty much at 1-year lows, so I think it's at an attractive price. And I like to make sure that it's at a good price before I enter the position. What I do is I buy whatever stock I find on my list or multiple stocks. I try to find them when they're undervalued, and as soon as they get between a 1 and 5% profit, I like to take my profits, get my money back, and that way I can put it into the next stock that's undervalued, and I can just keep cycling that over and over. In some situations, if it's a really high quality name that I want to swing trade for a longer period of time, I will buy and hold the stock, especially on high quality companies like, Apple, AMD, Microsoft, AT&T for the dividends, Amazon, Qualcomm, Alibaba. We have a lot of high quality names in this portfolio that I think will just naturally go up over time. So we also want to be benefiting from, if the market goes up, that's pretty much the easiest time to make money. Shorting is going to require a cost to short. You're going to have to pay interest. You're going to have to pay, time value on options. So in my opinion, just buying stocks and letting them go up is the cheapest and easiest way to, make easy money, in my opinion. But yeah, that's pretty much what we're doing, guys, is we are selling options with about half of the money. We're making about $10 a day from time decay currently with our current setup. With the other half of the money, we want to collect dividends, we want to invest in high-quality companies, and we want to swing trade undervalued companies. That's pretty much all that we've been doing for the past, multiple years now. And as you guys can see, the strategy is working out. We have a 2% return for the week, 20% on the month. Of course, I'm rounding. We have a 15% return in the past 3 months. And in our past year, our return was over 100%. So our strategy definitely has been working out, and I'm excited to share it with you guys. So that's week 2 of our $10,000 trading challenge update. We're having a great day, a great week start to the challenge. Good week for the first 2 weeks. So stay tuned for more. We're going to be doing week 3 in the next week here, and we'll keep you guys updated with how our trades are working out. If you have any comments or questions, definitely feel free to drop those below in the comments. Check the video description. You can get a free stock. I like to use Public. It gives you the free stock very quickly, and it's a great app for trading fractional shares. And as always, guys, thanks for watching the video. Don't forget to smash that subscribe button, like the video if you haven't already, and we'll talk to you guys soon.